Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, as promised, let's get at the management of Intellect Design Arena. They saw a strong set of numbers that came in. We have Mr. Arun Jain, who is the Chairman and Managing Director, who joins in on the show. Hi, Mr. Jain. Good morning. Thanks so much for speaking to us here on CNBC-TV18. Well, the revenue growth was very, very strong at 12% on a quarter-to-quarter basis. Give us a couple of details then. Your license revenue now contributes to around 18.5%. What is the target? Where does that number move to? And also, I just wanted to ask you, was there some spillover of this license revenue? Because in the third quarter, it was in high single digits. Now it's almost moved into the high teens. Clarify on that as well.
Yeah. So let me give you the context of the business, what Intellect is. And I keep repeating multiple times for my investor that we have an annualized business. Last 12 months is a critical metrics which we need to respond to and work with. So last 12 months is where we are able to generate 20% growth from last 12 quarters. I think that's what our critical point I would like to bring it here. Quarter-on-quarter revenues are difficult to monitor, and 12.5% may be looking extremely good from that perspective. But year-on-year growth is something which we really want to monitor, that how we are growing 20%. So we promised 20% top line and 20% EBITDA. We have met both the numbers. We discussed these two numbers during the last May call with you, that we'll be doing 20% top line growth and 20% EBITDA. And both are there, where we've invested 5% of our margin into building a next capability, and which we launched as a Emach.ai in February this year to drive sustainable growth.
You know what we want to understand now. You said that 20% revenue growth, you've done more or less that, roughly about 19% year on year. Margins earlier, you would speak about 25%, but now you're saying 20% because of the investments that you're making in Emach.ai. So does that mean that margins for FY24 would be around 20% as well, with 20% revenue growth? That's point number one. And secondly, as Nigel had pointed out, license revenue growth in contribution to your overall revenue is around 18.5%. Will that increase further? Where does that settle?
Yeah, there's a second point I want to bring, that the three components of the license linked revenue, the direct license revenue, the platform revenue, which is a SaaS revenue, and AMC. These three things constitute our license linked revenue, where we are making a technology investments. So which are above 50% from quite some time. It's 54% as a combined revenue, because these revenue gives a higher margin, and that higher margin will be reflecting in 24. We are again driving towards 25% margin in 2024.
Okay, in 2024, you said 25% margin and top line growth?
Top line growth, we are not giving guidance, but we are just still looking at it that our business is designed around 20% growth number. So we are still driving towards that. It may be anything between 15 to 20%.
Got it. 15 to 20% growth with margins moving towards 25%. I missed that number. How much will license revenue contribute as a percentage of your total mix?
54%.
It will contribute 54% to your total mix.
License. That's right.
All right. Interesting there.
What is the comparable number, sir, for the past year?
Comparable number last year was around 50. 50 will move to 54.
Okay.
Okay. So 50 moves to 54. That should be good for your margins, and which is why you've increased your guidance as well from 20 to 25%. How much more will it mean in terms of increased investments for Emach.ai? That's point number one. And secondly, your aspiration was to hit a revenue target of $75 million per quarter. You've hit that. When do you go to 100 million from? By?
Very nice question. I think you're asking like a boat to me, the $100 million, and that's what we are driving towards. Internally, we are driving towards $100 million over the next 8 quarters. So definitely that's the kind of a internal agenda we are looking at it. Our strong technology, strong customer base, now strong distribution around AWS, Azure, Accenture, IBM as a partnership, strong portfolio, which is a diverse portfolio of 3 line of businesses. Each line of businesses have 4 product line. The entire portfolio approach is something which is de-risking our portfolio. So these are the 4 elements which we call technology, customer, distribution, and portfolio, which is helping us to move forward towards this dream vision of $100 million a quarter.
in next 8 quarters. So at the end of FY25, we'll be seeing this number, right?
We should be.
Okay. All right.
Yeah.
And what about your high value active pursuit? It's currently at 70. How much do you think you can convert out of this?
They keep moving up and down on quarter. I think today the focus on quarterly closure is difficult. Last year we closed close to 42 deals, out of which some 25% deals are destiny deals. So that is remaining balanced over the period of time. So 70 deals closure, sometimes it doesn't happen. It moves the deal to the next quarter. Financial risk happen, US industry, something or the other happens. So we can't predict that much.
All right. You briefly spoke about the business that your Emach.ai that you're investing in. Could you tell us what is the potential you see from this particular business? Like you have a vision for the entire company for the next 2 years. What's the vision for this particular vertical in your business?
This is a kind of a technology, moving from product to technology. Today, banks are looking buy versus build. So they are building a lot of digital technologies using a lot of growth in service industry happened because of the build phase. Now we are saying Emach.ai gives the opportunity, which is driven around event, microservices, APIs, cloud native and AI coming together. So this is one of the first of its kind in technology in the world, which has a potential where large customers are looking where they can work together with Intellect, where their technology teams, their partners, their vendors can build on the top of it. So this is first 3 months we are receiving a good traction from the partner like Accenture and IBM is loving this technology because it enables them to work on the top of our technology, as well as AWS and Azure is finding this technology is right technology for on-premise customer to move to the cloud. So this is a big, large market of core banking transformation where we are fighting with the Thought Machine and Temenos head-on. And this market is the biggest market in the banking space.
And there is no downside risk to your revenue growth target, right? Because of the slowdown in the global economic environment right now?
We can't predict anything of that nature right now. I think US exposure in banking is less than single digit. So it's not so much impacting. Those the 2 deals got impacted in US, but those deals are anyway part and parcel of our journey. Last year, we lost 2 deals during Ukraine wars and earlier situations. So that those kind of situations may happen. And time to time, we can update channels whenever we see the change.
Right. Thanks a lot for joining in and giving us all those details. For now, what we understand is that you're targeting 15 to 20% sort of revenue growth in the next fiscal with 25% margins as against 20% that you did this year. Importantly, from now on, the next 8 quarters from here, you will look at an aspirational target of $100 million per quarter. That should come by the end of 8 quarters as well. So that's the management of Intellect Design Arena. We saw a big move on the stock on Friday. The move continues today as well. With that, we'll step into a short break. On the other side, we'll continue our coverage on the markets.